Okay, students, that's my wife who's been helping me with the videos is not available. So today we're going to try to get through 46, 47, 49, 50, 52, and then 55. We'll try to get through those 6 problems today, and then we'll probably finish up the chapter then on Monday. We ought to be able to do that on Monday. So, all right. So let me talk about 46. Gordon is a sole proprietor of this Fashion Florals. During the current year, his van was involved in an automobile accident. The van has a base of $6,000. What is FFL's allowable casualty loss deduction in each of the following situations? All right. So this is a business casualty loss. Personal casualty losses no longer exist after 2017, unless the personal casualty loss is in an area that's been declared a disaster area. So, and the rules are pretty simple. If my casualty is completely destroyed, if the casualty is a complete destruction of the property, then I get a deduction equal to basis. If it's partially destroyed, that is, it has some value afterwards, then my deduction is equal to the lesser of my adjusted basis or my decline in value. Okay, so the lesser of those two. So let's look at 46. Comparable van sells for $4,000. Van was totally destroyed. In the accident, I get $2,200 as an insurance settlement. So it doesn't matter what the value was before. I look at the basis. The basis here is $6,000 minus my insurance reimbursement, which is $2,200. My casualty loss deduction is equal to $3,800. Part B of this, comparable van sells for $8,400. I get $6,400. Here we now have a casualty gain. Base of $6,000. I now have a $400 gain. And as we're going to talk about eventually in chapter 11, we're going to say that this is going to be a section 1231 gain. Okay. 47 now. Comparable van sells for $4,000. It is partially destroyed. It's worth $1,500. So that's the first thing I do is I take value before versus the value after, which is $2,500. And then subtract the insurance reimbursement of $1,200. And so my casualty loss then is going to be $1,300. And then part B of this, comparable van sells for $6,400. It's not worth $1,500. That gives me a decline in value of $6,900. Well, I'm limited to my basis here. So even though my decline in value was $6,900, I'm limited to my basis. So my basis of $6,000 minus my my insurance reimbursement of $1,200 gives me a $4,800 casualty loss deduction. Okay. Okay, problem 49. Owns an electronics store, destroys my point of sale terminal, and steal $3,800 in cash. So that's where we're going to start with the $3,800 in cash that was taken. In addition to that, cash drawer, the point of sale terminal purchased for $7,500, an adjusted base of $3,700. Estimates that a similar point of sale terminal is $6,000, but it is destroyed. So here I'm going to be limited to my basis. Remember, I'm limited to my basis. So my basis here is $3,700. We then had some inventory stolen, which, and the inventory now, our cost of goods sold on that inventory is $4,200. And let's see. In addition to that, we have to replace a door of $540. And that all totals up to $8,820, I believe. We're then going to take off of that my insurance reimbursement of $5,000. So my deduction is going to be equal to $3,820. Okay, let me just talk about what it takes to qualify for a casualty loss deduction. By definition, under the Internal Revenue Code, it has to be something that's sudden and unexpected. So a flood would be sudden and unexpected. A robbery would be sudden, unexpected. A fire, an earthquake, all those things would be sudden, unexpected. Things that are not sudden, unexpected would be the gradual erosion from building a cabin alongside a river that's continually being eroded around. Also, termite damage has also been held not to be a casualty because it's not sudden, unexpected. Termite damage is gradual, not sudden and unexpected. All right. Okay, problem 50. Wilbur owns 25% of Talking Horse, which is organized in an S corporation, a conduit entity. His basis in the property is $15,000. For the year, Talking Horse reports an operating loss of $28,000 and a capital loss of $6,000. Adjusted gross income of $72,000. Okay, so first of all, we're going to take these two amounts, the $28,000 times 25% is $7,000. The $6,000 times 25% is $1,500. Okay, so in part A, how much of the losses can Wilbur have if he does not materially participate? Well, this is where this problem gets a little fun. This $7,000 is a passive loss and therefore could only be used to offset passive income. And so therefore, this entire loss then is suspended, just like we did earlier in the chapter. This 1,500 then, there are two possibilities on this $1,500 amount. Number one is if this is results from things like stock sales, then this is deductible as a capital loss. If this, however, is losses that result in sales of business property, then this loss is also suspended. Okay, part B is that he does materially participate. If he does materially participate, then this $7,000 is going to be an ordinary loss. And because this is an ordinary loss, it's not subject to this $3,000 limitation like we've talked about earlier. And this $1,500 then would be a capital loss, which would also be deductible. As long as his total capital losses don't exceed $3,000, the total then would all be deductible. Okay, problem 52. Goldie sells 600 shares of stock for $9,000. Paid $27,000 for it. So $27,000 basis minus $9,000 sales price gives me an $18,000 capital loss. And it's a long-term capital loss. Okay? So in the current year, in 2019, I'm going to take $3,000 as my deduction, which leaves me then with $15,000 of a capital loss carry forward. Okay, 2020, no capital transactions. So 2020, I'm going to take an additional capital loss, which leaves me then with a $12,000 then capital loss carry forward. Then in 2021, I sell property for $12,000 that I purchased for $7,500. That gives me a capital gain of $4,900. And remember, what I can do is I can use $3,000 plus my capital gains to produce a net $3,000 capital loss. So I'm going to take $7,900 in capital losses to give me a $3,000 capital loss. And if we take this $12,000 minus my $7,900, that gives me a carryover then of $4,100 of carry forward then to 2022. Okay, problem 55 gives me an opportunity now to contrast what happens to an individual on a capital loss versus what happens to a corporation on the capital loss. Okay, Now, a corporation can only take capital losses to the extent that they have capital gains. So, a corporation that has $100,000 worth of income and a capital loss of $5,000 has taxable income of $100,000, cannot deduct the capital loss. So, in other words, I can only deduct capital losses to the extent that I have capital gains. But in addition to that, in contrast to an individual who cannot carry back capital losses and has an indefinite carry forward of capital losses, corporations have a 3-year carry back on capital losses and a 5-year carry forward. Any capital losses that aren't used after that 5th year are lost forever. They end up with Sam's goldfish, in other words. Okay? So what we have here then is in 2018, we have capital gains of $6,000. 2019, we have this capital loss of 20, capital gain, and we have a capital loss here then of $27,000. And in 2020, we have a capital gain again of $18,000. So what's going to happen is I'm going to take this, I'm going to take $6,000 of this capital loss, and I'm going to carry that back to 2018. Which now reduces this to $21,000. That then gets rid of this entire capital gain, and I'm going to get $6,000 times 21%, whatever that number is. I'm going to get that amount then back in a check back from the government. Okay? This $21,000 now, I can now use, remember, 5-year carry forward, I can now use this $21,000 here to eliminate this capital gain. Again, saving 21% of that $18,000. And that then gives me $3,000 left to carry forward to the next 4 years. All right. That's enough for tonight. Hope all of you are doing well. Enjoy your weekend. And I'll get back to you on Sunday night or first thing Monday morning. And we're going to go ahead and finish this chapter. And then we'll start on chapter 8 on Tuesday. And with that, I will let you go. Have a good night. Please watch the videos and make sure you keep doing your homework. I'm really pleased with how you're doing your homework. So keep up the good work. Have a good night.